The S&P 500, the Nasdaq 100, that's what we're discussing here on the day. Now, when we look at where we're at and how we kind of opened up on this day. So you can see we dive a little bit deep in here and we go into the morning. We get that nice drop, bounce on top of support, previous highs here on Nasdaq, as you can see, and you're bouncing right back up. You go into something like ES and it gets a little bit more interesting because you're kind of making lower highs or higher lows here, here as well. And then obviously kind of topping off at that 44.25, the level we continue to talk about here on the channel. So you're at this pretty decisive moment, but you're kind of just ranging, okay? Now, if you follow me on Twitter, I recommend doing so. You have all the charts, the watch list every morning, everything in between like that. I kind of told everyone you're still clearly in this range, even though you were selling off. So not to jump to any conclusions, right? And if you did this morning jump and you assumed we were just going to continue dumping, even though there was no reason to hammer shorts, you got tossed, you got destroyed there. It was bad, right? But still, you have no reason to hold too many swing longs specifically on tech names, because that was the only thing today. But I do believe there's decision being made here on the market, right? There's clear underlying signals that we've looked at in the past that are kind of playing out here once again. Now, before we go too far, again, on Twitter, you can check this out. You can see that we have Tesla and Netflix earnings tomorrow in the after hours, as well as LRCX, which is going to be interesting. So we should get some decent action, in my opinion, end of Wednesday going into Thursday, right? Now, we also have had banks happening basically since last Friday into today. This is kind of where I'm going to lead today's video. So when we look at some of this action, it's interesting. So we look at banks, which if we look at what's happening from rates and what's happening with the Fed, you know, rates going up is inherently bad for banks above all else. That's what led to the banking crisis earlier this year, things along those lines. Now, you would expect with inflation kind of resurging potentially that banks might not have the best earnings, especially with rates being as high as they've ever been, with yields being very high as well. But they haven't. We look at XLF and bank earnings performed well. XLF bouncing since the 4th. Great action here. And this ties back into indexes. We see here the number one area, and this is the first time in the past few days / week that we've seen tech take the biggest hit. Nasdaq, biggest hit. And then we see ES. What is it doing? Making higher lows. Okay. And then pushing back into that range. Now, again, I'm going to take you to the past really quick, just give you a visual, right? Just really quickly show you what happened last time we had this type of behavior. And I'm going to show you the IWM as well. The last time this happened is when we were breaking out. Yes, you're not going to be happy. You're going to say, Tyler, you're too bullish. You're this, you're that. But it was right here, ladies and gentlemen. Go back to March, May, give or take, when you break out over 4,300, 4,200, and we shoot up, right? That's the last time this kind of took place. It's a fact of the matter. It is what it is. Don't shoot the messenger, okay? We had an NQ kind of lagging a little bit here, but once ES broke, it was game over. We ripped to highs. And that's kind of where we're at now in this type of situation. Now we look at today as well. IWM, one of the best views of risk on versus risk off. I posted this way earlier too on Twitter, so you guys have it. It's literally all been here. I posted it like middle of the day. You can see the double bottom happening here, like on the 2-4 hour chart, and you're trying to get above 177 for confirmation. You break 177, I think we got some real upside opportunity, which turns back into risk on mentality. Okay, so we have a lot to talk about in this video, and I think we just need to clarify a few things so you don't start jumping the gun. But before we do that, to ask you to do two things: consider liking and subscribing every single day. As you can see here, I'm posting videos so you are prepared here on the market. Also, too, the Discord link is down below if you are interested. Never feel obligated to join. We have tons of free information: Twitter, YouTube Live, 10:30 a.m. every single day here on the channel. We're going over charts, telling you what we like trading, any trades that we're in as well, and then everything in between. We also have education on the channel, absolutely free, and the newsletter, so make sure you're checking it out. Now, what I want to do really quick, I haven't done this in a while. I know a lot of you guys have been asking. I do want to bring back Cheddar Flow, going over some of this data here, showing you a little bit of the options flow, what's happening there, and hopefully shed some light. Even if I'm not a huge fan of some of the action on the day, I still want to cover it for you guys. We dive into Cheddar Flow. We look specifically at the largest options coming in on SPY. You saw, again, sweeps specifically coming in to SPY, right? A lot of them, you got some mid-Novembers, and then you have the monthly right there, and then you have your December monthly as well. Those are the ones that I'm mainly interested in. Those are the ones that I'm mainly watching, okay? I want to see the biggest ones, but I also want to see them coming into monthly expirations. Those are the most important for myself personally. Okay, then we're going to go into QQQ. Go here. You can see what's happening. Again, a little bit mixed. a little bit mixed, but a lot of your big ones coming into the monthly expiration here, as you can see, November 17th, calls to the upside. Okay. And it made sense with what we're seeing here. We saw, in my opinion, tech underperforming on the day, specifically with what happened to NVIDIA. If you don't know, NVIDIA, more restrictions coming on them. And I think NVIDIA is down like $20-something on the day at the end of the day. So it's very important that we're identifying where the weakness was. And it's important to identify what big money is doing here. They're trying to take advantage and buy that weakness on tech, which is something that you would love to see, right? IWM, what's happening here? You can see a lot of, favoring the upside for sure here. 100% favoring the upside, right? Risk on is, what you're looking at when we're looking here, okay? So that's what we're looking at specifically there. I also did want to cover what was happening here on Bookmap. A lot of you guys have been asking as well about Bookmap, bringing it back on. I just haven't been using it as much as of recent. But again, it gives you a bit of a visual of what's happening here on the market. If you don't know, it's a heat map of the market and just showing you specifically on the S&P 500. Now, what I do want to mention are some of these icebergs that did come in today. Okay, icebergs are large orders that come into the market that you don't necessarily see on time and sales, right? They're not necessarily dark pool, but they're just large amount of buyers that are slowly, ramping into a position, specifically here onto the downside here today. So around noon, we saw some of those pushing us down from that local high region, which made logical sense. So again, what does this mean? So you're coming to the top of this range and give you that visual, going back to the chart. We go back to something like ES, and you can really see, and maybe SPY is an even better example, right? SPY, you can really see, you're coming to that top of like 437, 438 roughly. You come to the top of that range, the iceberg sets in, a large potential seller steps in, starts pushing you down. You get a little bit more here at the end of the day, but you're still holding up pretty resilient, okay? As well as you kind of zoom in here as well. Now, the next thing I want to mention is your CVD also coming in here. CVD, best way to explain it, haven't gone over this in a while, is showing you buyers versus sellers total amount, right? Just the amount of contracts being traded throughout the day on the market. When we look at CVD, typically when you're getting a really bullish day like today, it stays pretty green. We didn't stay too green all day, right? So it shows me that sellers are trying to take control, but again, they don't have control, right? And this is something that's gonna, lead me into the rest of this video as well. And something I mentioned on Twitter today also. We go into this and we zoom out, and sometimes the best thing we can do is look at some of these charts from a zoomed out perspective, and we look here, we get some of these breakouts, we try to get continuation, we try to get below 420, we can't even get to 418, and it's just a lot of failed attempts to the downside. Needless to say, it is what it is. We sat here for almost 5 days at the lows and couldn't break down, right? Those wicks indicate buyers trying to hold you up. You get back above 431, and again, buyers are holding you up, right? Sellers continue to try every day, and they might try tomorrow morning, right? To push us back down below 431, which is that line in the sand that goes back to,
last August, right? Zoom all the way back, right back here, last August 15th, we're still holding it. Failed attempts. So the question is, can we get back above 438, 437 and continue this to the upside, right? And I think, again, CVD definitely paints that picture that sellers definitely have been trying to push us down and hold us down, and buyers just don't even have to do that much to hold us at these levels, right? You can even look at volume and see what's happening here as well on the S&P, 75 million. It's not terrible. It's not incredible, but we've seen lower volume around 50, 40 mil, right? It's important to realize that. So again, we're getting still moderate, decent volume, but sellers still can't do nothing here. That's very important to realize. And it's also important to realize what's happening globally right now. We have a war breaking out in the Middle East. We have what's happening in Ukraine. We have, we just got rid of our House Speaker. There's nothing really great happening. We saw a resurgence of inflation. So it makes me think, if any time we should see sellers take control, you would think right now. I'm just saying, right? That's my train of thought here. So again, that's what I'm viewing. That's what we're looking at. And again, if you're new to the channel, you're wondering, well, Tyler, where do we get the confirmation for the breakout to the upside? It's been the same level. I'll have it on Twitter as well, posted later tonight for you guys to give you an updated chart. But you want to hold above 44.25, 44.20 on ES futures, the S&P futures. And then on Nasdaq, you need to hold above 15.4. Right? 15.4. You hold above those levels and you're bullish, clear breakout. It's a freight train to the upside. You also have that nice bull flag. God bless. That's on the daily. Looks very good. Buenos nachos, gazpachos, but it's not cold. That's what I'm saying. It's absolutely hot. We love what we're seeing here. Okay. Next up, I do want to talk a little bit about the dollar and what's happening with oil. Okay. So I tweeted out something this morning as well. Again, if you're not following on Twitter, I recommend doing so you can get that morning update every day. Today, what did I say? Very important to mention the dollar and oil. Oil are even ranging as well with no direct confirmation in either direction. Okay. So the dollar, people have been saying the dollar is strong. It's this, it's that. Okay. I'm going to tell you right now. I don't think the dollar is necessarily strong. I'm going to tell you that right now. You are ranging though in between 107.1 and 105.8. Those are our levels we're watching. Okay. You get below 105.8. I think it's clear cut downside weakness in the market as a whole. You go into oil. We look what's happening here. Oil's a little bit of back and forth. Okay. You're sitting in between the 94 and roughly 84. Okay. I would like to see us close below 82 to be very weak on oil to get some more downside confirmation there. Okay. But oil's kind of up in the air with what's happening with Iran and their overall involvement, which it's kind of like leading to believe that they're going to get involved. And we've seen Iran make comments, and I know a lot of you guys are war experts, and I don't trust you, but I'm going to hear you out. But I want you to just listen to me for 1 sec. Okay. Iran is saying we don't want to get involved. And you might say, oh, well, Iran's not going to get involved. Well, they are involved. They're this or that. One thing that I will say, and I said the same thing about Russia. I said the same thing about China. I'm going to say the same thing about Iran. I don't think you can trust anything that comes out of these countries' mouths. Any of them. I don't think you can call me whatever you want. Okay. If a country's run by a dictator or a crazy person or a crazy group of people, right? We know that Russia and China are. And if you think that Iran isn't and they're being helped by the Chinese military with doing their trainings, Google it, right? It's all factual that's happening there. They're allied with, Russia and things, North Korea, things along those lines. I'm just saying, I probably wouldn't trust things as they say either. So they say they're not going to get involved. I would be like, look, dude, pretty unlikely that they're going to be like, hey guys, yeah, we're going to get involved with Israel. We're going to bomb the hell out of them. You're welcome for the heads up. So again, I'm taking it with a grain of salt. High possibility to get involved. If that happens, oil will shoot up, and most likely, I think the price target is locally like $100 still, but definitely worth mentioning. If they don't get involved, all the better. Thumbs up, go, go, go. Oil probably gets slammed back down to the trenches. So things to mention there. But again, I can't give you a viewpoint if I'm guessing at that point. Now, the one concerning part across the board, yields. Okay, so looking at yields, go to the daily real quick. Sorry, I have to go back here, pull that up. Yields. Back locally at highs. This is the 30-year, the 10-year, 5-year, 2-year. They're all at highs. Someone messaged today and 2 years at highs. I'm like, spoiler alert, Timmy, they're all at highs, right? That is concerning. But the thing that I will say is right now yields could be helping the Fed with, slowing down the market and the Fed not having to raise rates again. Catch 22. Interesting part in which we're at here. Now, again, when we look at what the Fed's going to look at from these inflation reports, again, it was very shocking that oil was not the catalyst that carried the last CPI reading. It was not whatsoever. Oil energy it was down, very much down. Okay, shocking. Believe me, couldn't believe it. Now, the part that was definitely hurting inflation was shelter, rent prices. And the reason why rent prices are going up or hurting, one, it was summer, so that makes logical sense. But two, you have to look at what's happening with the housing market. The fact that people can't really buy houses because rates are at 8%, I'm just saying it's going to make the demand a little bit higher for rents. And if everyone's rushing to get rents, it's just like catch 20. It's like, where do you go? Right? So it makes sense for, if everyone's rushing to rent instead of even buying at all right now, it's a tough situation, right? And I don't think the Fed has any control over that besides cutting rates, right? And that's not going to happen right now. So I don't know if there's too big of an impact that the Fed can say, okay, shelters are an issue. Yeah, we need to raise rates because that's just going to, fuel on the fire, right? You hear me out? Okay, so that's what we're looking at there. Now, let's zoom back in. Let's talk about a few equities and things along this line. Okay. Now, the one area of the market that was down today was semiconductors, right? NVIDIA, pretty terrible. You push down to 425. Shout out Jay Ream in Discord. Shout this man out. This guy's an absolute dog, right? Roof, bark, bark. Let the guy off the chain every once in a while, right? This guy is going nuts, right? So Jay Ream, if you don't know, he was in NVIDIA puts. They ended up selling today for over 100% gains. Absolute monster play. And he actually ended up just hedging his account on what was happening here. And this is a good visual of what we try to do inside of Discord, right? You can see that right there. Value just to hedge. And just on a hedge, he still made absolute bank off those contracts. But to highlight this, what we're trying to do in Discord, not just say, hey, you need to buy this, do that, but understand how to protect yourself, how to protect your portfolio, how to protect your assets. Because what do we always say, right? When it comes to trading, it's not about, hitting a home run, making $1 million in one day, making 100% on a 0DT call. That's why you don't see me mention 0DTs mainly ever, right? The goal is to protect the portfolio, survive another day, hold the wall, be able to withstand the bad days, the bad weeks, the slow, the chop, the in-between, right? So when you have the breakouts, you can thrive. That's where you make a bulk of your money, right? So hopefully you guys are learning from that as well while you're here on the channel, not even just in Discord, but you're learning from that here while you're watching the stream and the channel, right? So I'm very happy about that also. So those are things that we're looking at right now. Again, I might have jumped around a little bit too much, and if you have questions, please comment down below. I would love to answer those questions. We're going to go over a few equities, and I'll let you guys out of here. So again, going into equities, right? Now, today was a day of caution, okay? I'm going to say that as easy as I can, right? Caution, right? Now, on Twitter, I think on Sunday, I mentioned, right? You can go back and look, you can go all the way back, go to media. You can scroll all the way back. I think it was right here, Apple, right? So I said, high possibility we break, that I'm watching for 174 soon, right? Pushing back down to 174. Yesterday into today, right? Boom, shoot down to 174.8, right? We've seen some bad news out of Apple pushing us down. Now, what I will say, the fact that Apple is holding up, okay, right? If you don't know what's happening in China, their sales numbers are kind of getting crushed by 5% on their new iPhone sales. Not a good look, right? But it makes sense with what's happening with the Chinese government, and they're banning the iPhones from government employees, right? So those are things that are concerning to me. However, Apple's still resilient. It's still very strong, right? We go to Microsoft, even with some of the pain we saw today on, broad, tech names, holding up 330, the same level. And you're going to notice too, if you've been here for a while, right? You've been new to the channel for a few days. The levels don't change. 330, you're still holding it on Microsoft. Over 330, you're bullish. You got to be. Meta, right? You're seeing blood in the markets themselves side, but you're holding up. Is it, are you not entertained? Again, the only area of the market that's really showing weakness is Nvidia and semis because of the ban that's happening there from China. But besides that, you look really good. I'm going to tell you right now, okay? Banks look good. Across the board, we look decent. Tesla earnings tomorrow, Netflix earnings tomorrow. Again, shaping up decent. I'm going to tell you right now, okay? Tesla need to get above 259 to look good. But right now, you're above the 100 MA. You're holding above 250, 252. I'm targeting 259 still. That's where you're at right now. I'm going to mention a play that I'm liking here a lot, though, guys. Right? I didn't mention it yesterday, but I'm going to mention it today. Right? I'm leaving on this note, actually. This is the only thing I'm mentioning today. Called this out in Discord. We got in around 570. I wanted to mention it yesterday, but I didn't because I want to give Discord a one-day little heads up. Okay? I heard someone mention in the comments a few days ago. They're like, hey, Tyler, you mentioned a lot of the same stuff in Discord as you do on your YouTube. I'm like, that's the whole point. I don't want there to be a gatekeeping where I'm like, oh, I hold all my secret trades. Oh, yeah, right? You're going to get rich if you go into Discord. That's not what it is. Discord is going to help you understand why we trade that, right? Why we're getting out, why the risk reward makes sense, how to hedge ourselves, how to protect ourselves, right? When to get aggressive, when to be conservative, right? That's what Discord's for. And then the community, what we're trading throughout the day, what we're doing live, the scalps, the in-between, everything there, right? That's what Discord's for, right? So I want to make that clear. So some people were getting mad. They're like, Tyler, you're posting too much. You're posting too much for free, right? Discord, you're not going to get all this on YouTube. You're just not, right? You're not going to get all of it. Sorry. It's just not going to happen because I'm not live all day on YouTube. It's just the reality of it. But Costco, look, 2021 Target. I want to say that right now. 2021, it was Target. It was the land of milk and honey. The Bible describes it. The promised land, right? It was beautiful. You went in there. Those doors slid open. There was a Starbucks. There was a new place in there. Ulta, right? It was crazy. My son, we went in there. We would just go in there when I was a new dad. I would just walk around, just staring at the yoga pants, the MILFs. It was glorious. It was glorious. Sometimes Allie won't even let me go in there anymore. She won't even let me go in there anymore. But now, it's 2023. And Target, it's kind of like go woke, go broke. I think it's a good long-term buy. But we look here. Let's look at this. You have an ascending triangle here on the daily. You zoom out. I'm talking zoom out. We're zooming out, right? You're breaking the pennant, the daily pennant from 2022 to the upside with an ascending triangle at damn near all-time highs, mounting this key level at 571.5. You're pretty illiquid back into 586, and most likely if you start running, you're going to all-time highs. I'm telling you, Costco has got me more excited than me and Allie on the fourth date. I'm talking. I handled business right there. But I'm telling you right now, this thing's got me absolutely. If you're not looking at this, it's absolutely preposterous, as Stephen A would say. I'm telling you, keep your eye on it. Costco, love it. Get your cards out, boys and girls. Get your cards out because we're going shopping.